This is the best way to invest your first $100. You could start with more than $100, you could start with less than $100. I'm going to go over how to invest your first $100, but this lesson can apply to pretty much any dollar amount. I'm just going to use a nice round number of 100. My name is Mark Palmer.
Oh, hi, Mark.
When I first started investing, I didn't use the method that I'm going to go over today, and I do kind of regret it. I try not to have regrets, but I do kind of regret it because I think I would have made a lot more money and I would have learned this method a lot sooner if I would have dove in and just gotten right to it. One reason that it's not a full regret is because I did learn some lessons on what not to do investing when I first started out. So I'm here to help you learn this method now so you don't make some of the same mistakes I did. The one rule for this video is you have to make sure investing is right for you. It's an incredible tool if you're looking to build wealth, but it's not for everyone. Some people don't have the right situation to be starting with investing. Maybe that's because you have high interest debt or you're struggling to pay your bills as is. So whatever reason it may be, make sure that you're ready to invest before you jump into these investments. With that, I'll remind you that this is not financial advice. It's purely for educational and entertainment purposes only. So if you are looking for specific advice to your situation, please seek out a financial advisor. They'll be able to help you out. I do happen to be an ex-financial professional.
Oh, good for you.
So I am excited to make this video and go over how I would invest my first $100. So once you know that you're ready to invest this money, the first thing you have to ask yourself is, what is your goal for this money? From there, you can determine what type of account you want to invest in and what types of investments you want to hold within that account. I do have other videos that go over each of these topics. Next, decide how much money you're going to invest. Make sure this is an amount that you are willing and able to lose. It won't make or break you if you do lose this money because that's just part of the game. You're putting this money at risk. The method I'm going to go over today, though, is a little less risky than some of the other investing methods you may have heard of or may see or learn about or may be attracted to because they sound exciting. This method is going to help you lay your financial foundation and give you something to build off of as you continue to invest. I mentioned how I originally started my investing career with a method that I kind of wish I wouldn't have used, but I did learn from it, and that was by investing in just one individual company. So this was a little bit riskier of a way to get started investing. I was putting all my eggs in one basket. I completely rode the roller coaster of that one company, and when that company was doing well, I was doing well with my investing. When they weren't, I wasn't. It didn't matter what the market overall was doing. All that mattered for me was that one company. I definitely learned a ton from this investing method. I was truly riding that roller coaster of emotions where when the company was doing well, I was very happy. When they weren't, I thought investing was awful and why would anyone do this? So it was putting all my eggs in one basket. You're basically betting on this one roller coaster ride, and anything could happen to that roller coaster. You could break down, you could climb way up to the top, you could fall quickly, or maybe even you get replaced altogether. They could bulldoze you over, and there goes your roller coaster. You have nothing. So for someone just starting out investing, I wouldn't necessarily say that that is the safest route to go. There is no perfectly safe route when you are investing money. You're putting it at risk regardless, but there are routes that allow you to diversify your investments amongst multiple companies rather than just one. So the method that I would invest my first $100 in if I was doing it over again is to invest in something called an ETF, exchange traded fund, or a mutual fund. These are individual investments that hold hundreds or even thousands of investments within them. So one fund can hold hundreds or thousands of stocks in individual companies. So take my company from, my example of how I originally invested in just one company to start. I could have that company in this fund along with hundreds of other companies all in one fund, and all I have to do is just buy shares of that one fund, and I'm invested in all these companies at once. So an individual stock is a piece of ownership in one company, And an ETF or a mutual fund is a pool full of these individual stocks, and you get to invest in the pool. I'll show you an example of an ETF here. So this is a partial list of the individual stocks that the Vanguard S&P 500 index fund holds. This is symbol VOO. It's a very popular ETF that follows the 500 biggest companies in America, essentially. And look, we've got Apple, we've got Microsoft, we've got Amazon, we've got Google, we've got Tesla, we've got so many more companies. There's 507 that this fund currently holds. And all you have to do is buy some of this VOO ETF, and all of a sudden you're invested in all of the companies that this ETF holds. If I started over again and I had $100 to make my first investment with, I would likely buy VOO, because I would start off right out the gate being invested in 500 plus of the biggest companies in the United States, and it would just make me feel good to have my wealth spread amongst all of them. And it's something that I can easily just continue to buy more of and continue to build my wealth as those companies grow. Now, if you're looking to get started investing in VOO, you can go ahead and make an account on Vanguard's website and buy it directly from them. You could also go to a different brokerage platform like E-Trade or Fidelity, and you could open an account through them. These are called brokerage accounts, and you would buy symbol VOO within there if that is what you're looking to do. You could also buy this in different retirement account types, like a Roth IRA, for example. Make sure that you understand these account types. Like I mentioned, I do have another video that goes over that. But you can hold this in many different account types, and it's something that will get you diversified amongst quite a few different companies all at once. ETFs and mutual funds like this have been around for quite some time. It's been an easy way for people to get invested in a bunch of companies all at once without needing to go and buy full shares of every individual company that they want. You know, imagine trying to buy full shares of 500 separate companies. It would cost a lot of money because all those companies, range anywhere from $15 a share to hundreds, if not thousands a share. So it would cost a lot to get invested in all of them if you had to buy full shares of each. And ETFs and mutual funds have kind of taken away that difficulty and allowed people to buy just shares of the ETF or mutual fund and therefore be invested in all those companies at once. There's also a newer method, however, that you can get diversified that is another potential route for investing your first $100 that would get you invested in a lot of different companies without needing to buy full shares of each. The method I'm talking about here is through a platform called M1 Finance. I'm not sure if there are other platforms that do this exactly like this. I know M1 is very easy to use, simple to set up, and simple to get started. So I actually have an M1 account myself, and I've had a lot of fun with it. Basically what you do is you set up an account, and then you create a portfolio, which they call on their platform a pie. So picture a pie, and you can slice the pie however you would like. Basically, you can choose a bunch of different companies. Those become slices of your pie. So let's take that Vanguard ETF example where you've got Amazon, Microsoft, Apple, Google, Tesla. You could add all those individual companies, but maybe instead of having 500 in your pie, you're just going to have 5 to 10 or 20, however many you really want to invest in. And then you choose what percent of your pie you want each of those companies to represent. So perhaps you have, Amazon representing 50% and then 5 other companies representing 10% each. And you've got 6 total companies that add up to 100% of your pie. Then every time you make a deposit into your M1 account and you have auto invest selected, which is the default for M1 Finance, your money will get dispersed amongst each of the companies in your pie based on the proportions that you chose. All right, that was kind of a lot of info at once, but basically, to sum it down, M1 Finance is like building your own ETF or mutual fund. You can add whatever companies you want to it, and then you go and deposit money into it, you're basically buying shares of the fund that you created. The way it works from M1's side then is they go and they buy fractional shares of each of those companies. So it's a way that you can get invested in these companies without needing to buy full shares of them. And it's a great way to diversify your investing. And I personally just think it's a lot of fun to pick and choose companies, pick and choose what percent of my money I want to go to each. And then I just have it set up on auto deposit every single week to take some of my money out of my bank account and invest it into my M1 pie. You can even build a pie on M1 out of ETFs. So let's say you want VU in your pie, but you also want to have an ETF that focuses heavily on tech, or maybe it focuses on international investments. The opportunities are pretty endless, and M1 does have some pre-built portfolios or pies that you can choose from. They make it super easy. So I do have a link down below this video that you can use to get started. It's a referral code, so if you start with that code and set up your account and deposit $100, you actually get a $10 bonus, and then they give me a $10 bonus. So it's a great way for us to support each other there. And I know that I said that if I were just starting investing today, my first 100 would go into VU, but maybe I would combine these two methods here and I'd have my first 100 go into VU within an M1 Finance account, and I might have more than just VU in my portfolio because it's fun to kind of play around with it and add companies that you think are going to have a bright future and that you want to invest in. All right, let's summarize this video a little bit here. So your first $100 investing, you got to make sure that you're willing to lose that money and that you are ready to invest. But if it were me and I was investing my first 100, I would choose something that diversifies my investments, whether that be an ETF like VOO, or whether it be designing my own portfolio that is diversified amongst multiple companies on a platform like M1 Finance. I'd love to hear your thoughts and feedback about these methods. If you have any feedback, please leave it in the comments below. You can also leave any questions there as well. I appreciate you watching this video. If you haven't yet, please like and subscribe to my channel. It really helps me out and motivates me to continue making videos like this. So thank you. That's all for today, so we will see you next time.